Hello, Rob Lambert here with Asset Protection Training. Today I'm going to be talking about when is your offshore trust domestic for tax purposes. It's really weird, but sometimes, in fact many times, you can have an asset protection trust that is offshore, international, translated unreachable by creditors in most cases, an offshore international trust for debtor-creditor purposes, but treated as a domestic trust for tax purposes. I'm going to talk about this unique situation and talk about what the consequences are. They're not that great if you take a conservative approach, and talk about the issues. This will be a short video, and again, these tax issues are not for regular people, do-it-yourselfers. Simple issues. They can be researched very simply, but you do, or you should at least, always seek professional tax advice when doing compliance, because if you do things wrong, it can cause you a lot of heartache and trouble, although this one isn't near as bad as not reporting an offshore bank account. Okay, when is your offshore trust domestic for tax purposes? Well, first, let's start with what is the definition of a domestic trust. Push the wrong button there, sorry. Here we are in the Internal Revenue Code, section 7701, A30. We define offshore and we define domestic trust. And I'm going to read it to you. 7701A, subpart 30, and this is a long definitional section in the code. The term United States person means any trust if two things: a court within the United States is able to exercise primary supervision over the administration of the trust, and (i) one or more United States persons have the authority to control all substantial decisions of the trust. Now, this is combined with 7701A31, which says a foreign estate or trust is any trust other than a trust described in subparagraph E. That's 770130E. This is something you can download below, so don't fret over it if you can't see it all with me moving it around. But basically, if you structure a trust, or if a trust is structured so that a court within the United States is able to exercise primary supervision over the administration of the trust, and one or more United States persons have the authority to control all substantial decisions of the trust, it is reasonable for your tax preparer to take a position that it's domestic. You usually do this, or this is usually a possible and comfortable position, if the assets are in the United States, if you have a U.S. trustee, which is really in the kinetic world very common. Not very common in normal asset protection trusts. But in the kinetic world, in the kinetic trust, you'll find that I often do have the U.S. trustee. And that is not for, again, the uninitiated. Most trusts will probably, done by normal people, done by normal trust companies, are not domestic. But if you have a domestic trustee and you've submitted to this jurisdiction of one of the 50 states, and the assets are in the United States, you can comfortably, or you should be able to comfortably, take a position that it's domestic. This is a year-by-year decision. It is not a one-time, for all decision. A trust can be domestic for 1 year, and then you move to a more protected environment, and a great deal of the money goes abroad. Well, all of a sudden, you might find your trust no longer a domestic trust. You'd find it to be a foreign trust. Well, what's the big deal? The big deal is nothing. It doesn't cost any more. It doesn't expose you to any risk. The real problem is you have to file a complicated 6-page form. It takes about 3 hours of a tax return preparer's time to file a 3520. All it does is seek information about your offshore trust and how you operated it. I'm giving this to you to download, and I'm not going to try to show it to you all today. but it's 6 pages long. Doesn't cost too much to do, and is a small price to pay for substantial additional protection. And candidly, in many cases, you can take a reasonable position that it's a domestic trust and even save the problem of filing the 3520. Although, if there's any doubt, comply. There's no reason not to file it. As I said before, it doesn't increase your taxes. Download this and take a look at it. Don't try to do this yourself. Spend the time and money to get professional advice. And don't let the taxes scare you off. I know we're all afraid of Uncle Sam, and they do a good job of scaring us. But believe me, when you comply, when you even make a good faith effort to comply, even if you over comply when you don't need to, it never seems to hurt. It always seems to help. And believe me, the government has enough crooks to deal with. If they see that you're complying and being forthright with your required filings, they're much more likely to give you the benefit of the doubt. And that happens a lot of the time. They're out to catch the cheaters, not the people who are doing their best to comply. So you may be able to take a position your trust is domestic. If not, treat it as foreign. File the 3520. Not a big deal. An extra 3 hours of work. Thank you very much. I hope this is helpful.